We will respond like they've never seen before.
Backlash to Elon Musk's increasing involvement in politics also appears to have contributed.
Canada has fired back at Trump's aggressive trade policies, banning Tesla in response to upcoming U.S. tariffs. This bold move threatens a $50 billion hit to Tesla's valuation and escalates tensions in an already heated trade war. The fallout could reshape industries and disrupt the global economy.
Those 25% tariffs will go into effect tomorrow.
Trump's trade war has reignited fiercely. After a 30-day suspension that gave the stock market a momentary breather, the U.S. president is charging a 25% tariff on goods from Canada and Mexico, America's two largest trading partners. These tariffs, set to effect Tuesday, send shockwaves through global markets. But what's fascinating is how this move has put Elon Musk, one of Trump's closest advisors, and the head of the Department of Government Efficiency, in a vulnerable position.
Sure. Well, Errol, basically what Elon Musk has been talking about over the past, say, few months, ever since Donald Trump's election back to the White House, that has been fueling this anger, this frustration.
Musk, who wears many hats as the face of Tesla, SpaceX, and Starlink, now finds himself caught in the middle of a geopolitical crossfire. Tesla, Musk's crown jewel, stands to lose big, and not just financially. Musk's. It's an ironic twist that pits two powerful figures, often seen as allies, on opposite sides of the fallout.
It will be an absolute disaster, and this is all due to one person, that's President Trump.
This tariff escalation couldn't come at a worse time for U.S.-Canada relations, which have already been stretched thin. For decades, the two nations shared a close economic partnership, especially in the energy and automotive sectors. Canadian oil fueled American industries, while cars, parts, and technology flowed seamlessly across borders. But now, that interdependence is rapidly unraveling.
Analysts say the cost for car makers could far exceed just 25%.
Canada didn't waste a second in hitting back. Prime Minister Justin Trudeau, who's nearing the end of his term, announced a 25% retaliatory tariff on U.S. electric vehicles, specifically targeting Tesla. But according to experts' analysis, the tariff will cost more than 25%. Ontario Premier Doug Ford made a bold move by canceling a $68 million contract with Starlink, Elon Musk's satellite internet company. At the same time, Chrystia Freeland, a leading contender to replace Justin Trudeau, proposed an even tougher action, a 100% tariff on Tesla vehicles. The message from Canada is loud and clear. They're not going to stay quiet while Trump pushes his aggressive trade agenda.
You need our uranium, you need our potash, you need our high-grade nickel. I will stockpile our high-grade nickel at 50% of your military and manufacturing needs. Your aluminum, the steel, the lumber. It will be an absolute disaster.
For Tesla, already dealing with dropping sales, this couldn't come at a worse time. The Canadian market has been a key revenue source, and losing it would hit hard.
Which is good, that's fine. America has a $55 million process, and $55 billion more in trade, and God bless them.
Even more concerning is the impact on Tesla's supply chain. Many of the batteries and rare earth materials essential for its electric vehicles come from Canadian suppliers. Without access to these resources, production costs could soar, putting enormous pressure on the company's valuation. Experts estimate Tesla could face a $50 billion loss, and this is likely just the beginning of the fallout.
President Trump is going after our dairy farmers. We're sending them fertilizer. 87% of it is going to the U.S. And yeah, can they try to get potash everywhere else? They can, but they can't get it up the Mississippi River.
The effects go beyond Tesla. Canada's retaliatory tariffs are aimed at hurting a range of U.S. industries. From farming to tech, these measures are set to widen the economic rift between the two countries. For Musk, who is already facing criticism for his close ties to Trump, this is adding fuel to the fire. Tesla, once seen as a leader in innovation and sustainability, is now deeply entangled in a global trade conflict. As these retaliatory moves take shape, the pressure is mounting, not just on Tesla, but on the broader US economy. Canada's actions show they're serious about standing their ground. And with the clock ticking, the stakes have never been higher.
Kia EV6 saw a double-digit growth in sales, and Ioniq 5 saw an over 30% increase.
In Canada, where tensions with the US are already high due to Trump's trade policies, the sentiment against Tesla has become palpable. Consumers who once admired Tesla for its innovation now view it through the lens of Musk's controversial actions, further complicating the company's position in the market. Similar frustrations are simmering in Mexico and Europe, where Tesla's association with Musk has led to growing distrust and reluctance among potential buyers.
Relationship with Donald Trump appears to be hurting Tesla's car sales, which were down 17% last year in Australia, and they dropped by more than 30% last month.
This backlash is reflected in Tesla's recent market performance. Over the last 2 months, the company has seen a noticeable decline in its stock price and sales figures. Analysts have identified trade war risks and Musk's behavior as key factors driving this downturn. For investors, the intertwining of Tesla's fortunes with Trump's trade policies has created an air of uncertainty, leading to growing concerns about the company's ability to navigate the current geopolitical climate.
Tesla sales in Europe have taken huge hits recently, down 40 or 50% or more in the largest markets in Europe.
Adding to Tesla's challenges is the European Union, which is quietly preparing its own response to Trump's trade war. With 25% tariffs on EU goods set to take effect on April 2nd, European leaders have been crafting reciprocal measures in anticipation of the economic fallout. This escalation has significant implications for Tesla, as Europe remains one of its most important markets.
Canadian energy powers American manufacturing, businesses, and homes.
The EU's push for green energy and sustainable transport has made it a key focus for Tesla's growth plans. However, the new tariffs could disrupt this, making US-made Tesla vehicles more expensive and less attractive to European buyers. This may push consumers toward local brands like Volkswagen and BMW, costing Tesla valuable sales and reducing its influence in one of the world's fastest-growing EV markets.
It would be better for Canada to be the 28th EU member.
Meanwhile, Canada's shift away from the US toward the EU and Asia has reshaped energy and trade dynamics. Through the Comprehensive Economic and Trade Agreement, CETA, Canada now enjoys 0% tariffs on exports to Europe, allowing it to redirect vital goods like oil and natural gas to more reliable trading partners. Previously, the US was Canada's main energy market, but recent trade conflicts have pushed Canada to diversify. This shift has serious consequences for the US, which now loses a dependable energy supplier. Canada's redirection of resources means reduced access to oil and natural gas for the US, at a time of heightened competition in global energy markets. This long-term loss of Canadian energy represents a significant challenge for the US, which has relied on Canadian imports to stabilize prices and meet domestic demand.
Powerful. We're powerful on energy. We're powerful on nuclear energy, on oil, on goods going back and forth across the border.
For Tesla, the future looks increasingly uncertain in this fractured global market. In the short term, the company faces an immediate loss of revenue from Canadian and Mexican markets, where its electric vehicles have been popular among environmentally conscious consumers. The implementation of retaliatory tariffs by Canada, including a 100% tariff on Teslas, effectively prices the company out of these markets. This loss of access is compounded by stock market volatility, as investors grow wary of Tesla's ability to navigate the ongoing trade war.
Tesla now feeling the pain, but because of what's happening here in Europe, Tesla sales fell by nearly half across the continent just last month, 45%. That's from the European Automobile Manufacturers Association.
Long-term risks loom even larger for Tesla. The company's struggle to maintain its global market dominance is exacerbated by rising protectionism and increasing competition from European and Chinese electric vehicle manufacturers. Automakers like Volkswagen and BYD are capitalizing on Tesla's setbacks by expanding their market share in regions where Tesla is losing ground. In Europe, for example, Tesla's declining presence due to tariffs opens the door for local automakers to strengthen their foothold in the EV market.
People just choosing with their wallets to not buy Teslas because of that Musk-Trump association.
Public sentiment plays a critical role in Tesla's trajectory. Elon Musk's controversial leadership and polarizing political alignment overshadow the company's reputation as a pioneer in sustainable technology. Consumers in Canada, Europe, and beyond increasingly turn to alternative brands that align more closely with their values. This shift in consumer perception poses a significant challenge for Tesla as it seeks to rebuild trust and regain its position as a leader in the global EV market. What is going to happen next? Hit like and subscribe to the channel to know how Canada will respond to the US tariffs.